Welcome to the Federal Retirement Podcast. My name is David Rates from Benchmark Financial Group, and every month we discuss important topics regarding the retirement planning process for federal employees. This Lunch and Learn series is an interactive discussion where individuals can ask questions. To join these discussions live, you may register by joining our email list at bfgkc.com. We also provide in-person retirement planning and benefit education to federal employees. To learn more about these seminars or to schedule a seminar at your federal agency, go to our website at bfgkc.com and click on seminars. Additionally, if you're looking for assistance to get your retirement on the right track, set up an appointment with us today. You can schedule an appointment online by visiting our website at bfgkc.com or email me at david.rates@bfgkc.com. The contact information is also listed in the description. By setting up a complimentary consultation, we can review your financial situation and develop a plan to meet your financial goals. We hope you enjoyed this topic and hope to connect with you soon.
Good afternoon. My name's Gary Rates. I'm the founder of Benchmark Financial Group. And today's topic is the power of your federal pension plan. Retirement planning is a crucial aspect of financial stability for anyone nearing retirement. The FERS system plays a significant role in ensuring that employees have a good foundation as they transition into retirement. Being a part of this system gives the federal employee the unique power of a pension. The basic benefit plan, or FERS pension plan, plays a major role in your retirement income. I'm going to introduce David Rates, president of Benchmark Financial, to start today's discussion. David?
Well, again, thanks for tuning in to today's call, everyone. Like everyone was saying a second ago, we thought it'd be worthwhile for this month's call to just do a quick dive into the pension piece of things. Your federal pension is a very valuable asset. So we thought it'd be, again, worthwhile to touch on some of the important pieces of identifying information to be aware of and some easy resources to utilize to get access to that information. Like a lot of things with federal benefits, maximizing the pension kind of hinges on knowing the cards that you're working with in terms of milestones of age and years of service. So feel free to chime in with any questions that might come to mind. All righty. So when you're trying to get a handle on the cards that you're working with the FERS or CSRS pension, it's always important to have a pretty good idea of where you can get access to identifying information. So there's formal estimates that you can get from HR, which are always valuable, but it's important to know that every year you have an employee benefit statement, which usually gets updated in January. And sometimes with the estimates that you get from HR, there's a time lag there and some back and forth correspondence that takes place. And if you don't have a HR person that's easy to work with and local, sometimes it can take forever and a day to get those estimates back. So knowing that you got an easy resource to draw from to get some identifying information is good to know. So this is just a snapshot of the first page of the employee benefit statement. So what are some of the important identifiers in terms of getting a handle on the numbers that you're working with for the pension piece of things when you're looking at the employee benefit statement? So one of the big ones is you want to confirm your service computation date for retirement. There's a difference between your service computation date for retirement and your service computation date for leave. So we'll touch on that here in a second. In addition to that, you want to confirm your FERS retirement eligibility in terms of the years of service that they have listed for you on the records. And you want to get a relative idea of what the FERS pension estimate amounts are. So it's always kind of a moving target until you get like right to the door of retiring. But again, having a general idea helps you get your ducks in a row in terms of retirement planning. So circling back to the service computation date. So one interesting example that we ran into. So a while back, we were talking to a person that was retiring from the government. And at the point that we got in contact with her, she just had her meeting with HR. They in the process of selling their house. They were getting their ducks in a row for an estate sale. And she called and she ran into this issue in the retirement meeting with HR. She was under the assumption that she was retiring at like a couple of years past MRA, but she thought she had 30 years of service. But there was a 1 year difference between her service computation date for retirement and her service computation date for leave. So her leave computation date said that she had 30 years of service. But when she first hired on, they were paying her as a FICA employee. So when you're getting paid as a FICA employee, you're not contributing to the first pension coffers. So it morphed into this situation where after the meeting, she realized that she could retire, but she would have been retiring with 29 years of service as opposed to 30. And the difference between doing 29 years of service versus 30 meant that she was going to take a pension reduction and she wasn't going to be eligible for the FERS retirement supplement. And just knowing the fact that the minor difference between leave computation date and retirement computation date is an important variable because it can have real life impact on your retirement planning. So in a nutshell, the leave computation date is kind of a catch-all for every piece of creditable time for your service history. The retirement computation date is the years that are applicable towards retirement. So if you've got a fairly plain vanilla service history, then it's usually not something to worry about. But if you've got a service history that's a little bit more colorful, it's definitely something to verify, especially if you got like chunks of military time that you're making a deposit for, or if you left the government and then came back to work for the government. Sometimes when people are in that boat, there's a discrepancy between what they have listed for leave computation date and retirement computation date. But your pension is based off of the service computation date for retirement. So this is just a snapshot of the page that inside of the employee benefit statement that has that listed. So if for whatever reason there's a discrepancy between what's listed on your employee benefit statement for a retirement computation date and what you think the service computation date for retirement is, it's definitely something to get to the bottom of before you're knocking at the door of retirement. So you don't want to get to the finish line and then find out, like in the example that we just mentioned, that you're 1 year shy of one of those milestones of age and years of service, which would have a noticeable impact on your pension going forward. So this the employee benefit statement is a useful piece of information as well, because it also gives you a snapshot of some of the dates that you can retire. So retirement eligibility and just a general idea of a pension estimate, you can find that inside the employee benefit statement. So in section G, they'll break down retirement eligibility in terms of what does it look like or what are the dates for optional unreduced retirement? What are the dates for voluntary early retirement, for instance? And in addition to that, they'll give you a general idea of the pension estimates. The one thing that the employee benefit statement doesn't usually do is make a forward projection on what your high three is going to be. So like if you're trying to get an idea of what the numbers look like if you're planning to retire 2 or 3 years into the future, then oftentimes you want to try and get an estimate from HR, because usually the estimates from HR will make a forward projection on your high three as opposed to running it at your current salary in terms of calculating the pension amount. So circling back to the estimate, this is just a snapshot, a formal estimate that you can get from HR in terms of getting a handle on what the pension is going to be. So what are the important pieces of identifying information to look for when you're looking at the formal estimates from HR? So obviously you want your eyes gravitate towards the gross pension amount, but if you have any sort of surviving spouse concerns, you want to know what the options are for that. And then in addition to surviving spouse benefits, getting a handle on the high three salary that they're using for that calculation is important too. Because let's say you're planning to retire 5 years from now, if they're running the estimate based off of your current salary, it's not going to be exactly correct. Usually they'll do a forward projection on what your high three is going to be. So if you're in that zone where you got a few years to go, it's important to to do a little due diligence and see if he can get an HR retirement estimate. But if like I said, if HR takes forever and a day to get those back to you, knowing that you got some numbers to work with, the employee benefit statement is important as well. So the top number on the estimate, first base annuity, that's the gross amount. So in this scenario, it's illustrating a survivor benefit. So you want to know what the cost is going to be for that survivor benefit and the benefit that's going to be payable in the event that you pass away. So that blue arrow right there would represent the surviving spouse payment. The green or the red arrow in the red box represents the monthly charge that they take out of the back end of your pension as a retiree to leave that surviving spouse benefit. And there's a few different options that you can go with. So oftentimes the standard default will be the maximum survivor, but you also have the option to do a partial survivor benefit. So just knowing the right language and the right questions to ask should put you in a spot where you have a better picture on, again, the cards that you're working with going into the retirement planning process. Diving a little bit into the pension itself in terms of the milestones of age and years of service. So it's important to remember that your pension, like we said on the beginning of the call, it is a very valuable asset. Uncle Sam's going to keep making those pension payments independent of market variability. So it's not like a 401k account where you got to manage how the money's invested relative to the withdrawals that you're taking out so you don't run out of money earlier than you were planning. Pension's a valuable asset because independent of market variability, those payments are going to keep coming to you. So main variables to keep in mind, obviously age is an important one, years of service, verifying the correct years of service that are being used to calculate the pension based off of your service computation date for retirement. Surviving spouse benefit options, you got a few choices there. In a nutshell, you can do a life only option. You can do the maximum survivor benefit, which is 50% of your first pension, or the partial, which is quarter, 25%. And knowing the cost associated with each of those survivor benefits is important as well. So it's important to recognize that Uncle Sam's also addressed the funding gap that exists going forward. So new hires that they're bringing on are contributing significantly more to the first pension system than folks hired before 2013, for instance. If you were hired pre-2013, you pay 0.8% into the FERS retirement system. For folks hired after January 1st of 2014, just shy of 4.5% is their contribution into the FERS pension system. So the running joke was thank the new hires that they're bringing on, because if you were hired pre-2013, you're paying between Social Security contributions and FERS retirement system contributions, 7% is going towards those two chunks. Whereas folks hired after January 1st of 2014, it's a little over 10.5% between Social Security contributions and the 4.4% that's going into the FERS retirement system, which is it's a good thing at the end of the day, because Uncle Sam realized that he needed to bump up the contributions that are going into the system to keep it viable. So this slide is just a snapshot. Minimum retirement age is one of the important, like the first milestone in terms of eligibility for retirement. So minimum retirement age hinges on the year that you were born. For a long, long time, it was kind of default that most people fell into that 56 age band, but we're starting to see minimum retirement age inch past 56. So again, it's all a variable of the year that you were born. So that one's pretty easy to get an answer to, but knowing the general rules for unreduced versus full unreduced retirement are important. So when you hear the language about an unreduced FERS pension annuity, if you retire at minimum retirement age with 30 years of service, age 60 with 20 years, or age 62 with at least 5 years of service, your calculation factor is 1% times high 3 times years of service. If you wanted to opt for what they call a full unreduced FERS pension, that would be you retired at age 62 with 20 or more years of service. If you're in that boat, then your pension calculation goes up by 10%. So sometimes people are weighing the pros and cons of going out at 60 with 20 years or hanging on for 2 extra years to get that extra 10%. So it's important. 10% doesn't seem like a lot, but in dollars and cents, it usually makes a noticeable difference. But that one kind of depends on how close you are to burnout status and whether or not you want to be done and ride off into the sunset as a retiree. So, but that's just one variable in the overall pie. So when we're working with folks, it takes a decent amount of planning to zero in on the right time to finally go. So if you're in a special group, so special group retirement would be law enforcement officers, air traffic controllers, firefighters. Those folks are subject to a mandatory retirement. So if you're an air traffic controller, your mandatory retirement age is 56. If you're law enforcement or a firefighter, it's 57. And then the requirements for an unreduced for a special group pension would be any age 50 with at least 20 years of service or any age with 25 years of service. We had a client retire at the end of last year at age 47. So she fell into that category of she got to 25 years of service at essentially like 47 and a half. So she was eligible to take unreduced retirement and has been happy as a client as a retiree. So and the calculation factor for the special group folks, 1.7 times high 3 times years of service up to 20 years, and then 1% high 3 times years of service for all the remaining years. So order of eligibility in terms of survivor benefits. Former spouse with a court order is numero uno on the list. Current spouse is number 2. And then there's a few rare ones, insurable interest in minor children. Insurable interest is a pretty rare situation because there's a few pieces that you need to or identifiers that need to take place for you to be in an insurable interest situation. Like if you're terminally ill, for instance, and you wanted to leave the pension to children, Uncle Sam doesn't give you that option. You gotta provide it's kind of like a health exam, not necessarily a health exam, but they don't let you do that situation where if you're sick and you want to leave the pension to kids, that's usually not an option. So it's a very rare situation for insurable interest. So it's kind of like a standard default that former spouse with a court order or current spouse are the two main options for survivor benefits. Because if you went down the road of insurable interest, oftentimes there's a reduction that takes place. The age of the insurable interest person relative to your age is an important variable there. And oftentimes people will take a very large decrease in their pension payment to leave an insurable interest, and you got to provide health certification as well. So what are the surviving spouse benefits available for the first pension? So the standard default on a first pension is the 50% or what they call the maximum survivor. So it's a little confusing because the maximum survivor benefit at the end of the day equates to half of your pension. In order to leave that maximum survivor benefit, you got to pay 10% of your gross pension for the surviving spouse to take advantage of that option. So, and it's not like you have to pay like a monthly check as a retiree. They just take it out of the back end of your first pension payment when you're an OPM retiree. So standard default option is maximum, which is 50%. The other option that you can opt for is what they call the partial surviving spouse benefit, which would be a quarter of your pension. So partial is 25% of your gross first pension at the end of the day. And if you wanted to go for that option, they charge you 5% of the gross pension amount to leave 25% of your pension to a surviving spouse. But it's important to note the red box at the bottom of this slide. In order to leave the federal health benefits for a surviving spouse, you have to go with 50 or 25. You can't just go with the life only option and then assume that FEHB is going to continue forward for a surviving spouse. So the first pension and federal health insurance are kind of, to a certain degree, directly tied to each other. But it's important because Uncle Sam's going to continue paying the subsidized health insurance premium through both survivors' lifetimes. So, and Uncle Sam pays about a little over 70% of the total cost for your health benefits. So knowing that you can have that subsidized health insurance as a retiree, and then God forbid, if you pass away and your spouse is a survivor, they can continue forward with that subsidized federal health insurance, which is a very valuable benefit for federal retirees. So definitely an important one to know. Moving on, we thought it'd be worthwhile to just touch on the first retirement supplement a little bit as well, because the pension and the supplement, they're kind of like two of the three main prongs of retirement income. So if you're in that spot where you can retire at MRA with 30 years of service or age 60 with 20 years, then you're eligible for this payment that kind of mirrors Social Security. It's never as much as Social Security, but depending on your total years of first service, like let's say you're retiring with like 35 or 35 plus years of first service, then your supplement payment is going to be pretty darn close to what your age 62 Social Security payment would be. But it all hinges on the years of first service relative to what your Social Security benefit is going to be. But it's not uncommon for that supplemental payment for most folks retiring anywhere from like $1,000 a month to $1,500 a month for that piece of things. So some important bullet points to know about the FERS retirement supplement. It's paid by OPM until age 62. It automatically stops at age 62 because that's when you're first eligible to turn on Social Security. So you don't necessarily have to take Social Security at 62, but you got to know that that supplement will automatically stop at age 62. So, and if you're used to getting the supplemental chunk that's rolling in, oftentimes people gravitate towards turning Social Security on at 62 if they're in that boat, just because they're used to getting that income rolling in on a monthly basis. If you're getting the retirement supplement, then you can't go out and make an unlimited amount of earned income. It's subject. The earnings test is the same as the Social Security earnings test. So for 2024 numbers, you can go out and make $22,320 annually or an extra $1,860 a month and not worry about that first supplement getting reduced. So in a nutshell, if you're getting the supplement, you got to be particular about employment after retirement. It's not that you can't go make any money. It's just you want to know what you're working with in terms of the amounts that you can go out and make, and what are some important pieces of information to know if you're planning on potentially going over that amount. So, and then for special group folks, so law enforcement, air traffic controllers, firefighters, they're not subject to the earnings test is applicable until you reach your MRA. So like if you're at a boat where you're retired at 50 with 20 years of service or any age with 25, then you wouldn't have to worry about them looking at the earnings amount until you got to your MRA number. So non-work, so circling back to the amount that you can make, non-work income or passive income, which would be government benefits, investment earnings, interest, pension income, annuities, capital gains, rental income, that doesn't count against the earnings test. They're looking at as you retiring and going to get like a salary job, making as much as you were making while you're working full time. They're not going to let you do that. And then if you're self-employed and getting contractor income or 1099 income, it's important to know that money counts when it's received, not necessarily always when it's earned. So we've had clients that have been in a boat where they're eligible for the supplement, but they have businesses outside, or they could get a consulting job. They're in that boat. Sometimes they'll go down the road of wrapping that business up into an LLC that their spouse is the owner of. And then that gives them an avenue to make more money over and above the earnings test and not have to worry about Uncle Sam clawing that extra money back. But if you're in that boat where you set up an LLC that your spouse is the beneficial owner of, you can get pretty creative because the LLC is kind of like a person in and of itself. So we've had clients that have opened up 401k accounts for their LLC, which gives you an avenue to squirrel away extra money that isn't going to count against the earnings test. So any questions, Patty?
There aren't any questions. David, do you have anything else?
Nobody has any questions. Thanks for tuning in. If you think of anything in the meantime, you feel free to give me a call. You can always send me an email or just go to our website and submit your questions via the website. Thanks for being on the call today, everyone, and hope to see you at some point in the near future.